So, market wrap up. Today is Friday, January 5th. I hope you all had a nice New Year's again. How'd the market do the first week? Pretty rough. Are we going to see a big crash coming? What's going on? What should we expect for the rest of the year? Well, stick around and I'm going to talk about that. Hello, my name is Adam Kahn, and I'm the Rational Investor. For those of you who don't know me, I hope you're doing well. Today is January 5th. Thanks for joining me. I really do appreciate it. Before I get into the market, the first week of the year and how the market did, if you guys could do me a favor, hit that subscribe button if you haven't already. Maybe hit the like button as well. I really appreciate the support. That helps YouTube's algorithm. It helps people find the channel. I'm really thrilled to see how the channel's been growing, and I want to thank you guys who've already done that as well. It's super cool. I'm getting really excited about it, and I'm having fun doing the videos as well. Now, none of this is financial advice. Please keep that in mind. Just look at the channel as entertainment purposes. I hope you find the stuff that I talk about interesting, but you really need to do your own research on any financial decisions you guys make. I'm just going to talk about markets because I enjoy them and discuss some of the things that I found over the years. So the market got beat up pretty good the first week. Some of the big name stocks were down a good bit. Now, my take on that is not that we have a big crash coming. It may continue to correct, but I think what's going on is nobody wanted to take gains at the end of last year, which is why you saw that huge run up. So now you have to keep an eye and see how it plays out. We had the huge run up. Now that we've gotten past the first of the year, those who wanted to take gains but didn't want to pay the taxes on it are comfortable selling some of these things, which is driving the prices lower. I think that's pretty natural. And I also think things move so far so quickly, there was bound to be a rebound in both directions. I mean, the 10-year went from what, a little above 5% to breach that down to like 3 and 3/4. Now it's back to 4.05. I think that's really reasonable retracement, no matter which way it's going. And I think you could see the yield go a little bit further. Same with the stock markets. The stock markets had a huge run up. Well, now they're pulling back a little bit, and I wouldn't really overthink it. I think now that we're past the new year, those who wanted to take profits are comfortable selling it because they've got another 12 months to make any decisions they need to against those profits. And it's a free 12 months of not paying the taxes on it no matter what's going on. I really do think as the year plays out, the markets are still bullish. There's enough nervousness, and it's been a general theme of what I've talked about. People got scared out of the market so much, they went into high yield savings accounts, they went into CDs, they went into treasuries. People who probably never would have invested in these things. If the markets catch themselves and start going higher again, the people that are stuck into these things, and especially the Fed's talked about lowering rates, as those things roll, if the rates are lower by the time that their things mature and they're coming out of those products, if the stock market's going to go higher, they're going to be a little bit jealous that it's moved higher while they've been getting their 4 or 5% return in their short-term CDs. That money's likely to push back into stocks and back into housing and push the markets even further. I also think there's so much negativity that odds are people are usually wrong. Graham Stephan was talking about 84% of people think it's a terrible time to be buying a house. Well, if 84% of people think it's a terrible time to be buying a house, my general thought is it's probably a good time to be buying a house. Like everybody else, I look at prices and I look at interest rates, and it seems really expensive to me. But that being said, if 84% of the people think it's a terrible time to be buying a house, for whatever reason, it probably isn't. It's probably a good time. That really is just how markets work. For whatever reason, when everybody thinks one way, they're generally wrong. So if that big a percentage of people think it's the wrong time to buy a house, again, probably the right time. Makes no sense to me. Prices look pricey, especially here in Vegas, and so do rates. But if the Fed cuts as far as the markets are anticipating, we'll see better mortgage rates. And the margin between the 10-year and a 30-year fixed mortgage probably comes in as well, making the interest rates on a mortgage more attractive. And to be perfectly honest, as I've watched the ebb and flow of the mortgage business, my guess is if the rates get back into the fives, no matter where prices are, you're going to see buyers more comfortable about buying properties. It'll have nothing to do with the what the prices are. They'll just be more comfortable for whatever reason that the rates are better, and that'll make them feel more comfortable to buy. If that's the case, inventory is still pretty low. I think it would be natural that the prices would go up. Again, hard for me to picture too. The gloom and doomers have a lot of good stats and a lot of good reasons that they point to. But to be fair, those are not new reasons that the markets are not aware of. The hedge funds and everybody else have all that data as well. So whatever they're pointing to, while it sounds great in their videos and it sounds really scary and it makes it sound like good reason why markets are going to collapse, well, they haven't been. And I would say the same for the stock market. Things seem okay. I really think this first week and possibly going into next week, it could sell off a little bit more. And I think it would even be healthy if it sold off to the point that it looked scary and then caught itself. I'd still keep an eye and I wouldn't go over heavy in anything. Again, you guys need to make your own financial decisions because maybe the sell off has some real follow through. Maybe the economy has some real issues. The thing is, it's quite possible that people bought into the soft landing rhetoric and got a little too bullish at the end of the year, too. Now, I don't know because I actually think we're going to have a soft landing. And that's coming from somebody in the mortgage business where things have been extremely slow. I just think that's the natural cycle of the business that we're in. It got overheated, now it's going to get too slow and then it'll normalize. I think same with everything else. I think the Fed's done a great job. I think they'll probably be behind the curve on the downside as well because I think the data takes time to hit the markets, but I think that we're not going to have some 2008 economic collapse. Keep in mind, back in 2008, part of what went on were the loans that people were using. I was listening to a guy I really like, who I really respect, talking about how the price to earnings ratios on homes were so much better back then. But people were, you had stated income, stated docs, people were lying about their income. Of course, the debt to income on the home prices look better. If somebody's saying they make $250,000 a year and they don't, well, their price to earnings ratio is going to look great. Whereas today, we actually need you to give us those documents to prove the income you make. It's a completely different scenario. And I've talked about this a little bit in other videos as well. They had these option arm loans that they were using, along with you could state your income and your assets, and you could get a loan for the down payment. So you're really putting up no money. So if you put up $0 on these loans that had different options that after the loan seasoned for anywhere from 3 years to 5 years, it then matured into a fully amortized loan. Well, when it did that, most people's payments, if they weren't paying that from the beginning, went up dramatically, and in some cases, 4 or 5 times what it was originally. Well, if you're paying $800 a month, and all of a sudden you get a bill that doesn't give you those options anymore because it's seasoned, and you owe $3,200 a month, well, that's a big difference. If you then start to look at the price of your home and it's gone down 10%, and you're now responsible to make $3,200 a month payments, maybe you're enticed to sell that property. Versus what's going on today, where people got in with interest rates below 3% in some cases, but many in the 3% range, as well as the 4%. You now have mortgage rates running into the sevens, and they even topped out in the eights at one point, and they're pinned into their home at a low payment that is a 30-year fixed loan, as opposed to one that's going to season after a certain amount of time and go up because that's the structure of the loan. I didn't see too many adjustable rate mortgages. Maybe there are that I'm unaware of. I also think if you look at the real numbers of the Airbnbs that most of these doom and gloom guys are talking to and factor that into what the housing market percentages are, it's a rather small percentage of properties. I think the government's trying to come up with solutions to add inventory to the market. But the inventory as a percentage is not that much. And people are finding ways to circumvent those laws. I mean, unfortunately, they just are. And maybe fortunately for the people who are doing the Airbnbs, but they're going to Facebook Marketplace or they're finding other ways. Or maybe they've built up a customer base that they don't even need to advertise it anymore. I think it's going to be very hard to actually clamp down on a lot of it in a way that pushes those properties to the market. They've even come up with something that the corporations, if they own a certain amount of homes, that they may be forced to sell those homes at 10% a year over the next 10 years. It's an interesting concept, but I don't know that that fixes the lack of inventory and the high prices. I think between higher wages, more demand, and less properties, you've just run into what's called inflation. I've said it before, no different than a carton of eggs is a house. I understand one is $2 going to $5, and the other one's 200,000 going to 500,000, but it really is the same concept. The only thing that mitigates it is the interest rates went from 3 to 7 or 8%. Instead of it going from 200,000 to 500,000, maybe it's going from 200,000 to 350, or whatever the math makes sense for the higher interest rates to offset that inflation. So hopefully you find it interesting. Beginning of the year looks scary. I predicted that at the end of last year. I kind of expect or hope it follows through in the next week, but I see this as a good opportunity to buy. Again, this is not financial advice. You guys need to do your own research and make your own decisions. Let me know what your thoughts on it. Do you have specific stocks you like? I have a couple people who I'm talking back and forth. They get me to look at the ones they like. Anyway, don't forget to subscribe. Don't forget to like and have a great day. I'm sure I'll talk to you sometime this weekend. Oh, and on Sunday, I'll do my update on my $10,000 portfolio that I opened for YouTube.